Welcome back to the Eric Krown Crypto channel. This is a very different day today as I'm joined here by 5 other community members of the Cave, of which we decided that it would be a good time to have like kind of just like an open podcast, basically. Mr. Falcone, who I believe a lot of people are familiar with from the Discord, kind of approached me with this idea. And then, first as kind of like an interview. And then we decided, well, why don't we just have kind of an open conversation? So I'll let everyone introduce themselves here if they desire. Don't need to dox yourself if you don't want. But from there, I'll hand it off to you, Falcone, and there you go.
Yeah. I started in the program, in your program, I think 2019. That's kind of a shared element that all of us in the group have. We all started in your program. We all that was our introduction to the markets, I believe. I mean, I could be wrong, but and I met a lot of people in your Discord, and I met Pena and a couple other guys, Magic Nil, a few other guys, and those guys kind of like helped me, push me in a certain direction, helped me to develop my edge, and helped me to kind of build out my system. So I think it's kind of interesting. We got a group going where we have people who all have that shared origin story in common, sort of. And it helps us to, speak the same language and be on the same page when we're kind of going about different issues. But I don't want to steal the show. Rob, do you want to take this one?
Hi, I'm Rob. I was in Krown's Discord as well. I started trading with Krown about a year and a half ago, but my first exposure to the market was that bull run of 2017. I actually first bought in August 2017, so I got in really early. Lost everything, and I'm still learning.
Baptism. Yeah.
I'm the difficult engineer guy who can't quite get it at the moment, but I'll get there.
Right on.
This is Zach. I also joined around 2019, just around the time Falcone did, I think, within 2 or 3 months. I was kind of a buyer and holder of just crypto after that same bull run you just talked about, 2017. Just had a little bit saved up, and then the YouTube algorithm found you, Mr. Eric Krown, when you're in the middle of some crazy rant with bells going on and stuff, Damon. And first I was like, what is this idiot? And I switched, off of you. And then I was like, you know what? That's not entertaining. So I went back and I actually got to know you, like how you felt about the market and your opinions. And it got me interested in trading. And I think within two weeks of watching your streams, I bought your program and I started there. I also blew out an account with Bitcoin. And mostly do Forex now because of the emotional trauma.
None of us have blown an account ever.
Yeah, indeed, man. Mr. Iceblocks?
Yeah, man. My name is DJ. I started end of 2020, I think, with your course. And after that, I joined this Discord group, and that really helped me a lot. I finished my strategy now, and I'm trading profitable, so it's fine now. Yeah.
Hell yeah. Mama's boy, we won't dox your beautiful name, but I'll just kind of open it up from there, man. So what do you guys want to talk about?
Right. I started trading. Well, I started learning trading 2018, and I actually attended a crypto meetup somewhere where I live, and then someone told me, "Oh, I'm watching this guy on YouTube, and he's actually know how to trade." It was you, obviously. It was Krown. I didn't know at the time. I just checked your YouTube videos the day after. Then I was like, oh, yeah, this guy's really good. So I started following you April of 2019. And I joined the course September 2019, same as Falcone, I believe.
Sweet.
And yeah, from there, still struggling, obviously, learning everything, rewatching everything. And now, obviously, I think that with the videos that you're doing now, you're hammering down on backtesting and everything. And that's what our group is all about, this little group that we have from the Cave. We are focusing on backtesting and how important it is to actually have a strategy. So that's where we are right now.
Right. Yeah. I mean, that's actually a really good point that you made right there, is in the sense that backtesting is what it's all about. I mean, you don't really need anything that's like super super sophisticated as far as trading goes. I know people can go into like super deep mathematics, sources of edges, and some people, go super with just looking at like trend, for example. But none of that matters unless you actually fucking back tested and then you have something resembling relevant statistics that you can base a goddamn strategy off of. That's really the basis of anything that I've kind of come back to myself. And it seems like you guys have kind of come into your own with that as well, and seeing that, once you see those results, once you see the statistics, it's very easy to be your own authority. It's very easy to just trust yourself instead of looking towards someone else as like just something better than you. It's like, no, you know it better than them at that point because you've actually done the fucking work. You've seen it in front of your face. You've seen how these things interact. And that's what makes you, that's what's going to make you successful, basically.
Yeah, there's less hesitation as well, because if you've got something you can trust, you can just enter and say, oh, I've got my plan and it works, instead of just, waffling around before you do anything, and then you either miss it or, make a totally wrong decision. So you don't know how to manage it.
Yeah, I think when you first start out, everybody's really concerned about what everybody else thinks. And
right.
Part of the development process is, not caring so much and just zeroing in on what you know and what your edge is.
100%. Yeah, go ahead.
Curious to, pick your brain and kind of learn a little bit more about like how the development process went for you and like what that went like, especially in the initial early stages, because a lot of people know your history, as far as, working at New York Stock Exchange, ARCA and things like that. Maybe they don't know, but I think you started out at the San Francisco Exchange, I want to say.
Yeah.
And then
PCS.
Yeah, like initially in your career. And then at some point you moved to NYSE ARCA at some point.
That is actually in San Francisco. What I did move to was Chicago. And I was in our office was above the SIBO at that point. So I wasn't even on the floor at that point. I was only on the floor on ARCA, which is on the West Coast. Yeah, just in insignificant details, but yeah, go ahead. Sorry.
Yeah, well, that's my uncle actually worked at NYSE back in.
Oh, right on.
Yeah, back in the 80s.
Man, that probably was a good times too. You didn't have to be too smart to make money then as well.
No,
they just gave it to you.
Yeah, they were all making a shitload of money. And he had a penthouse in Manhattan. He flew his sister out there and put her up in her apartment, bought her a Benz, all that. They were making crazy money in the 80s.
Right on.
Then the crash of 87 happened, and most of them got screwed. And I think he ended up being a carpenter for a while, and then he got back into trading for a little bit. But he built himself back up. But he had, I think, a story kind of similar to the story you had. I don't know if you're comfortable getting into that. I was watching.
We can talk about as much as you want, man. I'm an open book.
Yeah. So I know that, you were trading professionally for a good number of years. I think
about 4 or 5 years at that point.
Yeah, 4 to 5 years. And then you experienced like a blowout kind of experience. And I'm just curious if you could go into that and kind of talk about what you extracted from that. I mean, I'm sure it's at that point you had a very developed edge and you had kind of built out your edge over a period of 5 years. Did that experience happen because, you weren't following your edge, or did you have an edge in place and did it make you question that edge? I'm just wondering how you process that scenario.
Yeah. So at that point, no, I don't think I had a strategy that I was following, but I wasn't explicitly so militant about it in the way that I am now. And so I kind of looked at trading, and I came into trading as thinking as it in the sense of like people are always making a decision at every single moment. There's always something to do. Like you can just look at a chart, or you just immediately know whether I should be long or short, basically. Like I should do something right here. That's just not true. So first I had to kind of get over that. That was kind of like the first, maybe I'd say a year or so, like half a year to a year. Most of that was done for the first 4 months was done on a testnet account, or what is it? The equivalent of a testnet account. And then so once I got over that, I kind of had like what I was going through the motions with and what I was following, but I wasn't I wouldn't say that I really had like a plan, because the problem is that if I had a plan, that means I would have had a risk management. And that's basically what my issue was. I did not have a risk management. So what happened is if you go and pull up a chart of like SPX from 2013 to 2014 and a half, you'll just see it go straight up. I was shorting the whole way through, which is a terrible way to make money in a straight up market. And I thought, I was going to be right, because it's like, look, things have gone up this much. I'm looking at my volatility indicators. I'm looking at, my other strategies saying that, hey, things are going to come down a little bit. We're due for a 10% correction. Wrong every time. But I didn't stick to my guns in the sense of, hey, where am I wrong on this trade idea? That would have saved me the heartbreak of dealing with something like that. Just that simple rule right there is just, it boils down to, where is this trade idea wrong? And then thus I need to take this trade off, basically take the loss. And, I looked at trading, and I looked at, having good and bad trades is like, I did something right or I did something wrong. And it's like, it's no, with good trading, you can do the right thing but still lose money, and you can do the wrong thing and make money. But and that might be fine for like one time that you might get away with, or a few times that you might get away with, but over a long enough career, these statistics around that will naturally bring you back down to where you belong, which is zero. And that's what happened to me. And so I was so stubborn with it that I basically didn't stop until I lost basically everything. I quite literally did have not just $0.0 in my bank account, but I was in, major debt from there. So it's like, it's quite the experience there. Anyways, getting over that was like a multifaceted process, basically, because first I had to get over the emotional devastation of being broke, which I hadn't really ever experienced in my life. Before that, I came from like a middle, maybe even middle upper class family at times, especially when I was like much younger. Later on, not so much, but it started out good. I never really had major money issues. So to deal with that for the first time in my life and really have that shoved in my face, that was a huge emotional blow. And these huge emotional blows can be very they can actually be very useful if you know how to use them. And at that point, I'd actually studied quite a fair bit of psychology. Sorry, there's a bit of feedback going on someone's microphone there. I don't know exactly who it is, but you might need to turn the volume down a little bit or get headphones. But basically, what was going on? Sorry, I just lost my train of thought. What was going on is, yes, first I had to get over the emotional devastation of it. That took like a week to 2 weeks, I'd say, where it's just like you feel like shit. You feel like, or I felt like, I remember waking up every morning and feeling like someone had their boot on my chest, and it's like it's like keeping me down, and just getting through the day was kind of difficult. And even just getting through one day after that without like breaking down, and crying on my couch, that was difficult. It was actually quite difficult because, you feel like a failure. And quite literally, I was a failure at that point. I'd failed at what I set out to do. And so getting over that took about, I'd say 2 weeks, I'd say. But the way that I got out of it, I think, is something that is really important, because I think that anyone can take this information. And the way that I got out of it was not by immediately being successful, because you can't go from zero to successful immediately. It can't be done. But the way that I did it was just simply getting back on the path to what would make me successful, which was simply this. And it's exactly what you guys are focusing on, which is fucking amazing. And it is this: just nailing down your strategy, back testing it, and then using it, after you've gone through it. And so once I started to do that, once I really sat down with myself and I said, hey, Krown, so I talked to myself in the third person, said, hey, this can be done. I've seen many other people, because I was surrounded by successful traders on the floor and in Chicago. So I knew it could be done. So I'm like, it can be done. Like I can do this, but in order to do it, I need to put my ego aside and come at it from like the complete learner sort of mentality, in the sense that I need to go back over everything with a fine-tooth comb and figure out where I can actually have an edge. It's like, I don't need to be perfect, but good trading is dealing with imperfectness, but just following a strategy that you know over time gives you some sort of edge, to reference the name of your channel, which, by the way, I'll have a link in the description below. Definitely check out Falcon's channel. It's really, really good stuff. So that was the key to kind of getting over it. And then obviously after that, it's simply just getting funding and then, following it, which is a process of, well, it's a process of taking responsibility and a process of repetition, which anyone can do. It's just because we're so coddled in our Western world, most of us just aren't raised culturally to do that. So it's very difficult.
I think,
so yeah,
if that happened to a lot of people, they would totally scrap their edge, especially if they're just starting out. So I'm wondering how much that happened to you. How much of your system did you start to put under the microscope at that point?
Right.
I'm wondering if you blamed your psychology or your system, and I'm also curious how your edge has developed over time, right? I mean, you've been trading a long time.
Yeah.
So I'm sure it's kind of evolved over the years. And would you say options is kind of the key to some of your strategies?
Yeah. Options make things just infinitely easier because you can make money trading volatility rather than trading direction, which is more of a mathematical process than it's just more of a mathematical process. So you can have a better edge there, basically. Okay, so as far as my strategy goes, my strategy at the time, I didn't make too many changes to the underlying strategy. What I made changes to was I need to have a risk management, and I need to follow that as if it's life or death, because it is life or death. And when you experience going broke, that is essentially a death. So I had that reference experience at that point, and I was able to always come back to it and be like, all right, I'm in this losing trade right now, but I know, because I've dealt with this in the past, if I fucking hold on to this, it ain't going to turn around for me. So I better let it go. That was really the full key, which I think is probably the priority in a conversation like this. Then from there, how did my strategy kind of evolve over time? Yeah, it definitely has evolved over time. When I look back at my old strategies, I'm like, what the fuck was I thinking, man? Like, this is not that great. But it doesn't need to be that great, actually, in order for you to be profitable. I mean, shit, man, you can have an edge. You can have an edge that only hits like 20% of the time, but if it gives you a good risk reward, you can make that work theoretically. But how did it evolve over time? Well, especially when I started to do YouTube myself, which is why I think it's a great idea that you've done YouTube, and I'd suggest it to do to anyone, and also form these sort of like tight-knit groups as well. When you have to explain what you're doing to other people, some people who might not be as experienced as you have to go over back in your head. And as I was doing this myself with my own YouTube channel, I started to look at a lot of the things I was doing. It's like, this doesn't make sense. This isn't right. This is not, like, I don't need fucking 50 moving averages on my goddamn screen. This is not helpful.
100%,
yeah, exactly. And, and the problem is with my YouTube is that because I'm doing general analysis, that is completely fucking different than trading. So my issue with YouTube was also getting back to that, because I'd start to be like, oh, well, I think things are going up here. I should just get long. It's like, no. My strategy tells me to short right here because I'm looking at a fucking 15 minutes, for example. But yeah, it definitely helped in that regard. And so nowadays I focus mostly on, the way that I focus mostly on right now. And if I could dial down my strategy, just 3 simple things, it's this: trend, volatility, momentum, in that order. Momentum's like a distant third. It's actually number 5, but there's no 3 or 4 basically. And so the way that I do things is I look at trend first to get an idea of what's more likely to happen. When things are trending up, they're just more likely to go to the upside than to the downside until proven otherwise. It's vice versa for the downside, obviously, as well. Volatility gives me an idea of when things are likely to happen and the severity of when things are likely to happen as well. So what I actually really like to do is I like to first look at a trend, and then I want to look at when volatility gets very extreme and starts to contract again. And then perhaps I'll look at a momentum oscillator to get further confluence as to like a pullback's coming. And then I'll just play the pullback, for example, in the example of an uptrend. That is something that, I'm a lot more hot on nowadays than I was doing in the past. In the past, I was more so like, my stochastics are pointing down right now, so I should get short. It's like, nah, not necessarily. No, there's more to it, even though I could make that work. but it certainly was not optimized.
Yeah, it's funny
for
how
that matter.
everything you just mentioned is essentially what I would say, just using different language. And a lot of
Exactly.
times, we're using different tools just to essentially identify the same thing, in the market.
Exactly.
And
Exactly.
we end up arriving at the same conclusion.
Right, right. Yeah, and that's actually a really profound point, because we all have our own sort of unique experience, but that unique experience is all kind of it is all kind of the same thing. So we just naturally put different words on it, but it quite literally is the exact same thing. So that's a really good thing to notice, actually.
Yeah, when you think of the trend, do you think of do you use a certain time frame to dominate the trend? I mean, obviously the daily trend is there in most people's mind. For me personally, I like to trade trending scenarios and scenarios where, the intermediate time frames all the way up to the monthly trend sort of align. It's like a solar eclipse. But is there one, trend time frame that dominates your analysis?
So I can definitely see what you're saying in that regard. This to me is actually the difference between YouTube analysis and actual trading. So for me, when I'm trend trading, for example, I don't care what any other time frame is doing. Actually, I'm only trading the time frame that I'm on. Or maybe if I want to have like some, if I want to have some sort of confluence, I'll be like, hey, I'm trading the 4-hour trend right now. I want to look at what the 12-hour, the daily is doing, because if that's on the same side of the trend, this is probably going to be a little bit stronger. But in general, when I'm quite literally just trading, I'm really not looking at many other timeframes than the one right in front of my face, unless if it was very specifically back tested within that strategy. So that can be a factor, absolutely, and I have back tested that in the past before. But actually, my current strategy, I could not give a fuck less what the daily trend is when I'm trading the 15-minute, for example. It doesn't mean anything to me. I'm never going to look at the daily in that case.
Gotcha. And is there like a holy grail for you when you're looking at volatility, to identify that if you look at a chart and you say, all right, I think volatility is about to expand? Is there anything that lets you know that?
Right. So when I'm looking at volatility, I actually like to trade contraction moves rather than expansion moves, although you can definitely do that as well. And so is there anything that I look at? Okay, so for example, one of the strategies that I use a lot right now as well is I will use 3 moving averages to get an idea of trend, and then I wait for price action to retest one of those major moving averages, typically the 55, which is what I use as like a backstop or a baseline. And then I wait until volatility is very low. And what I'm essentially doing is I'm looking for price action in the case of an uptrend to put in a higher low on that 55, for example, on low volatility very specifically, because you're contracting into a higher low. So price action is, technically speaking, if it's trending to the upside, you look for your explosive moves to the upside. You look for your contracted moves as your pullbacks into higher lows. So I'm looking for that contraction to the 55 typically. And then I want to see the expansion from there as kind of confirmation that, hey, trend continuation is most likely. But what I really actually love using volatility for, if I don't have access to options, like very key point right there, is and like a really classic signal that honestly anyone can use, and this is it just fucking works, is this. When I'm using whatever volatility indicator, could be HVP, could be BBWP, which I prefer, or it could be even like a HVP of a stochastic, for example. All of these things work, they're fine. But I like to see 2 extreme reads of like 90 percentile or more, and then very specifically in my case, the BBWP gets back down below the moving average. That to me is almost always like extremely high hit rate, contraction move coming in, in line now. And you can expect whatever the current trend is, a counter move to that is coming. And it's probably going to come down, quite significantly, or up in the case of a downtrend.
Is the BBWP an indicator that anybody listening can just find on TradingView?
Yeah, just type it in right there, BBWP. It's made by Mr. Caretaker, who we all know and love. So yeah, man,
check it out. It's Krown certified.
That's my favorite one for sure.
The third point you mentioned was momentum. If you had to, of course, there's probably a lot there, but if there was a holy grail of momentum, what would that be? What you're looking for?
You mean like as far as like an indicator goes, or
Yeah,
what's
as
the word
far
that I'm looking
as
for?
like, looking at a chart with the perspective of momentum, and maybe that's telling you to stay in an existing position you have, or to add risk to an existing position.
Right. Yes. Okay. Exactly. So for me, I prefer two momentum oscillators. One of them, the RSI, the other one, stochastic. For my current strategies, RSI just fits better. But those are the two ones that I've essentially specialized in my career. So yeah, for the RSI, absolutely, especially within the context of the strategy that I was outlining earlier, I want to also see a momentum oscillator like an RSI shows very specifically divergence on those, those higher lows or lower highs, because those are where I want to be entering in on position alongside low volatility. And then those are typically very high quality trend continuation plays as well. When I say high quality, I just want to say something for the audience who, might not be as experienced or who knows, doesn't matter. But in my definition of like good hit rate, that's above 60%, just so you know. So it probably doesn't sound too impressive to any, to most people out there. But as for myself, anything above 60% or especially 65, I consider very, very good. You have to think about, long term, how often does that hit?
Yeah, no, I have to agree with that. I mean, I think people attribute a lot more significance to an edge than is really there. It's really just a much smaller thing than we give it credit for.
Exactly.
60% is a very solid edge.
Yeah, because you always mention over time you're going to be profitable.
Yes.
You're not going to win every single one. And some people they get on the Wall Street bets and they see these big wins and they think I'm going to do that every day, all day, and it just doesn't happen.
100%. Yeah, man. And it's a really big problem with Bitcoin as well, especially like in most cryptocurrencies, because they do have these explosive movements. And, some people just naturally, just by being there, they're going to be super fucking successful, and that happens. But that's not real trading. That's, in my opinion, is more kind of like on the lucky side of the spectrum. You could maybe argue that some people specialize in finding those. Hey, fair enough. But that's like, I don't care about like one really, really good trade. I care about the next 10 years of trades is what I care about, because that's what's going to make you a living, not one trade. I mean, I know very few people have made just one trade and they just live off that.
Yeah, I'm sure, being a public figure on YouTube, you have people who will message you and be like, Krown, you were wrong. You said something would happen and it didn't. What the fuck?
Happens all the time. Yeah.
It's like that's not how an edge works, man.
Right. Exactly. And honestly, that's something that you're going to run into on YouTube as well yourself. It's like, most people, they don't understand it like that, or they think, oh, you're the trading guy, you're the analysis guy, you should always get it right. It's like, no, not even close, actually. But what will make you successful is to identify very quickly when those things do turn around. That's what can make you actually pretty good. And also, what I've noticed for YouTube, and you're going to notice this as well, I'm sure of it, is that having to deal with those sort of situations, they do increase your sort of internal centeredness, which is really important as a trader, because you mentioned it earlier, or someone mentioned it earlier. It's like you can't care about other people's opinion, really. Like you really can't, because they're never going to know your strategy better than you know your strategy. They might be a good colleague to bounce ideas off of, but if someone's bullish and your strategy is telling you to be bearish, you guys could technically both be right on different timescales. I mean,
there was another guy, Magic Nil, who he was
right on. About, he's great.
Yeah, he was. We actually recorded a video on this, but he was telling a story about he was in a different Discord with some other guy we hadn't been in contact with, and this guy came to him and said, I have this really profitable strategy and it's been very profitable over a long period of time. What do you think about it? And he's like, well, does it matter what I think?
Yeah, exactly. It's like, you shouldn't care. You're doing fine. Yeah. So I totally get that, man. It's almost better. And what I notice with most people, and I definitely did this myself, is that, maybe even after that emotional blowout, isolate yourself and get rid of all these external influences, because you're not going to be in a place to trust yourself if you don't actually go through the work of back testing. Quite literally, there's just really no way around it. Like, I'm always going to be more sure of things when I back test myself than someone who can see all of my results they can see everything, which I've shown, a couple of them, especially on the program. But they're not going to have the experience of like going through, seeing how each and every one of those 100 fucking trades, like how it operated in between, even if they have the end results. Just there's no substitute for that, and that's kind of the great equalizer. Yep.
I'm just curious. Did you when you after that blowout and you started trading again? Did you get stuck around the emotional side of actually being in a trade? Because I find that can be it's really confusing, because you think you've made the wrong decision. You've done your analysis, you put the trade on, and then you think you've made the wrong decision. What stops you from getting out of the trade and saying, no, I've got to see this through?
Yeah, I was extremely fucking emotional after that, because it was going to be over for me if I failed again. Absolutely. So how did I get over that? It was quite literally just this repetition with exposure to those feelings, and then naturally over time they just kind of go. It's not that they go away, but you learn to deal with them better, in the sense that I still, even to this day, like if I put on a position, I'm like, oh shit, like what am I doing? What is this? Might go against me, whatever. But I always have to remind myself, it's like, hey, that emotional side of me, that is not the side of me that is going to make me successful. The emotional side of me is basically this like really ancient evolutionary process where, it's worried about things that we don't have to worry about nowadays. So, when you're experiencing those emotions, you're experiencing something similar to like an ancient human who was dealing with, I don't know, like running away from a fucking tiger or something, or acceptance within his tribe. And these were like really life or death issues for them. And trading can be kind of a life or death issue as well. But at the same time, you have to realize that there's a division between the sort of ancient part of your brain that's emotional and the more newer logical part of your brain. I know that there's like actual technical terms for this. I forget what they are. But like your lizard brain basically versus like your more modern brain.
Yeah.
Right. And you just have to realize that you're never going to get over that. Like you can't, because we grew up, we evolved with those brains for hundreds of thousands of years as anatomically modern Homo sapiens. And even before that, those are the same brains that kind of relate to, like, to quote fucking Jordan Peterson, for example, would be like crustaceans, right? Like lobsters. There's just no way that you're getting over that. They're too far ingrained. But what you can use is you can use the logical part of your brain to be like, hey, no, this is just an emotional response. This is meaningless, basically. You can get into a good trade, feel shit about it, and it works out for you, and great. But you can get into a bad trade, feel great about it, and it doesn't work out for you, obviously. So your emotions are not going to be what makes your trade good or bad. They have nothing to do with it. The only thing that makes your trade good or bad is simply following whatever plan you had laid out that has these statistics to support it. That is what can make you actually successful. And it's just when you're first getting into it, it's quite literally just that, just repeating it, man. Because once you repeat it, I'll add Mama's boy back in here. Once you repeat it, that's when slowly but surely over time, you can start to notice your own patterns with that. And you're just like, okay, I feel that again. I'm going to identify that emotion, but I'm still going to do it anyways, because I know that's what I should be doing.
Would you say journaling is the best tool to do that?
I was wondering if you actually track your emotions while you're going through it.
Do I track my emotions? Yes, I do keep an emotional journal. I don't do it as much anymore, because after so many years of doing it, it's like it doesn't really affect you as much anymore. You kind of just go through it. But definitely for the first few years after that, absolutely. And what I do is I would make a point to like just alongside my trade journal, is I'll just have like a little note on top of it, like how am I feeling on this one? Maybe like an hour into it. Maybe like right around the end of it, that actually really, really did help, because I noticed that a lot of the time I was getting into these trades that ended up working out, but I felt terrible about them for like the first third of it. So that was actually quite enlightening. And also just writing about things and getting them on paper is just a really good way to, assuage your own emotions anyways, because I don't know, I actually don't know why, or I have no idea why, but it helps, or at least it helped me, I could say.
So I know there's there's kind of an idea in trading that, if you have a certain like significant life event, maybe a death in the family, maybe a divorce or whatever, you don't want to trade, you don't want to be trading. That's pretty obvious, but I'm wondering where do you draw that line? Like what kind of life event is qualifying?
That's a really good question. I can give you a really fucking rude answer and say nothing does. Now look, that's for you to decide. My mentor, who I learned the most from, he literally took no days off, like ever. and it didn't matter, man. If it was 9/11, he was still there. He was still there, man. He was there that day. Now they did shut everything down for the next couple of days, but I guess I just kind of wasn't raised that way. I don't really have that as much in me. I'll take time off if I'm going on like vacation or something. But even then, I always want to make sure that I'm still in the groove of things with like my YouTube videos and whatnot. Kind of keeps me, keeps the sword sharp. So, what would be like a good general rule? It comes down to your personal preferences, but do understand this fact. The fact is that, the more time that you do take off, it will at some point be more difficult to get back into it. And if I had to pull something from psychology, I would imagine that is somewhere between the 3-week mark and then the 3-month mark, as those are typically when your emotional patterns can kind of get a bit reset if you start to lose your routine. So that's, again, like 3 weeks. And then I think as much as 3 months, like definitely no more than 3 months. 3 weeks can maybe be okay, I guess. But I'm never going to tell someone like, hey, your mom died, don't fucking trade. It's like, or sorry, you better be trading right now. It's like, no, I'd never tell someone that. So, just understand where those sort of theoretical pain points would be based off of psychological studies.
That's really interesting because, that's pretty rock solid, I think. I guess, yeah. I mean, if you have solid control of your emotional state, then it doesn't have to affect your behavior. It does. I guess it doesn't matter. You feel whatever you feel, but if you're able to implement your risk management profile, then it doesn't matter.
Right. Yeah. I mean, when you think about it, an external event will never get in the way of the statistics of your strategy, anyways. So theoretically, there's no reason why you should stop, other than to take care of, the people that you love and the people that, you should support.
Yeah. So kind of when you were building out your edge after that, did you rely on any mentors after, you went through that experience, or was that something you did solo in that development?
Yeah. So I did kind of look at my mentor as like a colleague at that time, and I contacted him as a colleague saying, hey, I went through this. What do I do now? And he's like, now you're grown up, basically. And so, yeah, pretty brutal. But that was actually the right thing to say. It's like, no, look, you're responsible for this, and you need to be the one to pick yourself up and move forwards. Isolation, I think, at that point is really the best idea. And then you just want to be able to look at like a potential mentor or someone as like a colleague that you can, kind of borrow ideas from, or maybe they've had a similar experience and they say, hey, like, I can't tell you exactly what to do, but what I can say is, go back to the basics. Here's what you should be focusing on. Go back to, the really raw just focus of back testing and going over strategies in the really most granular way possible. I mean, that's really what everything gets boiled down to at the end of the day.
Yeah, I think it's a question a lot of people have is like, you look around and you see a lot of people who are successful in trading, they tend to have mentors, but like you're saying, at a certain point, you outgrow the mentor. You no longer have the same need that you did.
Well, that's what it is to become a professional, and really to just mature in any source of life or any sense of life, because you need to be comfortable with being your own authority, and you're never going to feel that way if you always have, like a dad figure. Basically, you need to outgrow your father, which, in most cases just means like your father dying, which is kind of, awful, obviously, or at least that's how it happens for most people. But you can obviously have that happen beforehand as well, to kind of quote Carl Jung. Anyways, on that topic, the most important thing with trading, and really what I try to impress the most upon the YouTube community, the Discord community, everything is like, don't look at me as a fucking authority. Like, you cannot look at me as an authority. You can say, hey, Krown has some cool ideas. He taught me maybe some cool things even, but I know my shit better than he does. It's like, because you should know, and you have to be comfortable with making your own decisions for yourself. And if you have like kind of a crutch of being reliant on other people, you're never going to be fully comfortable with that. And you just can't, it can't work at that point. You cannot be a trader or anything in like sort of an authority sort of position if you don't accept that responsibility yourself. And that's really just a really sombering process of realizing that nobody knows what's best for you, man. Nobody knows. Barely even people know what's best for themselves. So you shouldn't be relying on someone else to begin with. Again, you can kind of consult them, kind of look at them as colleagues, but you can't value someone else's opinion of what you're doing more than your own opinion of what you're doing. Point blank period. There's just no way around it.
Yeah, when I was first starting out, the closest thing I had to a mentor was a guy who worked at CME on the floor of the CME exchange back in the 90s. So he wasn't, that I don't even think he used a computer to do that. When he was
they didn't. So I don't think they got that until the 2000s.
On the technical side at all.
Right.
But, a lot of the wisdom in psychology hasn't changed one bit, and And so early on in my development, he was able to just ruthlessly crush some of the illusions I had about it,
Yeah, and that's when you need it. Like early on, you can have that, but there is a switch at some point where it's like, no, you have to make your own decisions for yourself. Like, maybe you're a more long-term trader. Maybe you're like an investor, like a very long-term investor, as we know some people, are. But
not saying any names, right?
But that obviously that's not going to work with someone else who's like thinking in the time frame of like a 5 minute, obviously. So, these sorts of things are really where, our Western sort of society kind of fails us, because we're taught through school. There's always a teacher. There's always a right answer. You can't, you have to get the right answer. Otherwise you're wrong. You fail, blah, 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 blah. Like that's not going to work in trading. It can't work in trading. There is no right answer. There's a right answer for you. And if you're not comfortable with deciding that for yourself, no one else can do it for you.
Yeah, I struggled with that in the
cool
beginning.
Stories he had, this mentor I had, he told a story about back in the 90s and on the floor of the CME, the biggest S&P trader had like a meltdown day, and he was the biggest trader on the floor. And, apparently he had such a bad day that whatever firm he was working for had to come down to the floor and tie his hands together.
Oh my God.
Walk him out of the
Sounds about right. Sorry, Abraham, what were you saying?
Oh, I was just saying I struggled with that in the beginning. When I was wrong on a trade, I thought it's because I did something wrong. Like I didn't come out with the correct answer. But in reality, there was no right or wrong answer. It was just, part of the statistical edge. So
Right. Yeah. And even going back on that point too, that's almost why sometimes I probably even sound like annoyed or maybe even rude to some people in the Discord or YouTube who ask like, Krown, what should I do in this? And I'm like, I don't fucking know. I don't know what your strategy is, man. You tell me what you should be doing. You always want to push it back on that person and be like, hey, like you need to be thinking actively, not passively. You need to be thinking, what am I supposed to do? Because you should know. I can only give you like the principles for that, which basically comes down to, hey, did you backtest your shit? Okay, follow that then. If you like the results, just follow that. Simple as that.
Yeah, one thing that drives me nuts is when people come into your live stream and they're like, just tell me long or short. And I'm like, oh my God.
It's like, dude, you're fucked, man.
That drives me
fucked at that point.
Yeah.
I think a big issue people have when they're, starting out is they'll have a system, and then if they have a drawdown, they'll scrap the system, and start a new system. And it's like, well, you'll never build it out if you keep doing that,
Yeah. So, and it takes time to perfect a system as well. I mean, if I backtest something and I get better than 50% results, better than 50% win rate for it, for example, then I will actually work on that strategy for a while longer and see, what other little puzzle pieces can I move around to maybe edge that up a bit, because 50%, that's actually quite good. I mean, that's like a good start. That's a good start, and you can make that work. So kind of going back on your point, yeah, work it out. There's like, this is really where you can use your sort of discipline and energy as a trader. It's not by like putting in more trades, it's by back testing your shit and seeing what the results are. That's where your focus can be used.
It's an interesting one. I'm curious as to how long did it take you to actually build your edge, the discovery phase. I mean, because for me, the discovery phase is a long time. I'm still in it. I'm quite happy to be in it, but because it's interesting. But I'm wondering, how long did it actually take you before you found, right, this is working for me?
Okay, so a bit more of a complicated question, because nowadays, since I already have like a base to build things off of, I usually have like an idea of, okay, this is probably gonna have something there maybe. Although, even recently, like I spent like fucking 3 hours backtesting just garbage the other day and didn't work. It was just a complete waste of time. Very, very frustrating. But when I first started, which I think might be more relatable, you also have to realize I kind of had a big advantage, because I did have my own mentor who was, telling me what to do essentially, which, as we discussed, kind of like a two-pronged thing. But at the same time, he kind of gave me a base to build off of. So I would say at first it actually took about a year. I'd say it took about a year to get something that was consistently profitable. Not anything like stellar, but decent enough. Nowadays, when I'm deciding on a new strategy, I mean, it might take like a week. It probably takes about a week. It just depends.
You have the advantage that you have the discipline you've built now already, because it's like most traders, they find a strategy, they try and make it work, and then they learn how to do the discipline. Once you've got the discipline, you can then start messing around, because
exactly
mess up. Because I think one of the things that's hardest about this is actually getting that in place, so that you're actually working with something from a solid psychological point, than just throwing it around everywhere.
Yeah. And that's like what we hope to do with like a program, for example. It's like, hey, here are some things that you can use as an edge. It's like you can treat this as like a buffet or like a puzzle that you're putting together, and then you fit it as you see fit. But still, I can definitely remember back to when I first started, like that sort of overwhelming feeling of like, where do I put all this shit? Where do I put all this shit? But once you kind of get your base down, which I relate to as trend, volatility, momentum, that's it. Or you can even just start off with trend, just start with a fucking trend. I mean, simple enough. Like trade. Here's a strategy anyone can backtest. I'd imagine it's probably going to work. Find an hourly trend, and then every time it puts in another local high or local low, draw a fib 50% and take a scalp off there. You probably scalp like, small percentage or something like that. It's probably going to work. Those things do actually work quite technically. So yeah, man.
I think it takes a certain amount of time for people to move into a probabilistic mindset. They typically approach the market from they need certainty, right? And it's very uncomfortable being in a trade. Yeah. Do you think that shifting into a probabilistic mindset is just a product of time, or time in the market, or is there any way you can accelerate that shift?
I don't know. I don't know. That's a really good question, man. Holy shit. So shifting into that sort of a mindset, the problem is that I think there's some people who are just more, they're naturally kind of born to align more with like that sort of a thing, like a mathematical understanding of the world. Some people are more creative, some people are more logical and mathematical, that sort of a thing. I know that Function is, of course, an engineer. Like that sort of a person is going to understand the math sides of it very, 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 very well. So, how can you maybe expedite that? I would imagine the best way to do it is, it's just quite simply repetition, to where you progressively desensitize yourself so that you experience it. And once you experience something, you have the reference point to relate it to, think back on, and call upon during your moments of kind of insecureness with your, with what you're doing, which are naturally going to pull up. But when you can pull back to it in your own mind and be like, hey, I learned this lesson before, I felt this way, but I know that if I trust in these probabilities, then over time it'll work out for me. And I really do think that the only way to expedite that would be to, or it's not maybe even expedite, but just do it in the least painful way possible, is to first start off with back testing on like a paper account, just back testing based off the history. That's fine. Then you can do forward testing, which actually TradingView is really good with, because you can do that replay function, and you can see, how things operate in real time. And then you can pretend as if it was like, a real account, but still it's going to obviously be a demo account. Then from there, you can maybe even trade like a small dollar account, and then work your way up as you basically get bored with things. Like that's kind of the right mind space that you should be in. Like you want to be bored, because you're bored when you're not emotionally triggered by what's happening in front of you. And that emotional triggering is what typically dissuades you from veering off from that logical thought process of trusting within the probabilities and statistics that accompany whatever strategy you are employing.
That's a really interesting point, because I think people have an image of trading as being, sexy and exciting. And really, that's not what you want it to be, right?
Because they watch these fucking stupid movies like Wolf of Wall Street and whatnot, and that's just not real. And also Wolf of Wall Street, I mean, people always quote that movie as like, hey, you're a trader, you must live like that guy. It's like, no, he was a broker, just so you know, like completely different thing. So all of the real traders that I've met are like pretty normal, subdued people. Like they're very easygoing, very chilled out. So yeah, not that exciting.
Yeah, I know when I first started trading, I would enter a trade and I was like, wait, this is supposed to work out in my favor immediately. I couldn't deal with uncertainty.
Exactly.
And I think you struck on a very good point that, just given enough time, you kind of get desensitized to it. If you experience it enough, it just doesn't hit you.
Yeah.
You're used to it.
One of the things that was actually rather enlightening for me was also recording the amount of time in my back testing that trades would take, so that I could realize that it's like, hey, I'm getting emotional about a trade that on average I know takes like, 3 hours, for example, from start to finish. I'm like 10 minutes into this shit. Why am I judging this right now when, I know that on average, most of the time it's going to be much more longer than this. So like give it a bit of a chance to breathe there.
Yeah, that kind of feeds back into the sort of when you're in a trade, being emotional side of things. Because I pay attention to how long trades. The last thing you want to be doing is if you're trying to scalp, being stuck in a consolidation, which is something that a lot of
right.
time.
And then you just focus on the chart too much.
You're sitting there in pain before anything's actually happening. Because we're mostly price action guys. I think most of us do just price action only, pretty much at the moment. Which is kind of a hard way to do it, I think. But for me, the indicators was too much input. But with price, you've got to watch, and so you're often just sitting in a consolidation, just going, "When's this going to end?"
Right. Yeah. Yeah.
So that was why I was asking you about the emotional side of it, because obviously when you're in pain, you can't think. Just cannot.
Yeah. Well, you're blocked off from your logical thought processes, actually. Like that's a well-known fact. So, it really is actually important to kind of get away from that. And, you can, like, obviously we've discussed things that you can do with trading, which is basically comes down to progressive desensitization in the way that I understand it. But outside of trading, you can also do things as well, going for a walk. For me, I go to the sauna, going to the gym. That really, really helps. If you have like a sport that you play, whatever it might be, just getting, those sort of things out seem to really, really help. Reading also as well. But, we also have to remember, and really, I put so much faith in evolutionary psychology in the sense that, like, we have to remember we're still dealing with these same brains that, like, people who evolved for hundreds of thousands of years, before, like, they, we have to deal with that shit. And we have like these reward systems, with just getting out there and moving and expending energy. And so when we don't do that, like all of our emotional and internal thought processes, they get like too tangled up and, they start to express themselves in like really bizarre ways.
Yeah.
So, yeah.
Yeah, for me personally, even though, I'm a little bit desensitized to being in a trade, I still look at different trades and I'll look at the amount of time they spend underwater, because I know it'll take a toll on my
Right.
mental psyche, over time. If I'm looking at a certain entry and generally that trade will spend a lot of time underwater, I'm not a huge fan of those trades. I tend to prefer, ones that hit the entry and then quickly move to the first take profit, and then I can start securing equity on the account.
Of course, there's no down ticks against you. Perfect.
The longer time you spend underwater, the more stress you're building up on your body.
Yeah.
If you start building that up and you're not dealing with that, that's going to shorten your life over time, because it
absolutely.
builds up cortisol through the bloodstream. Cortisol doesn't really go away. You just get more of it as you get older. Do you know what I mean? And it will shorten your life if you don't deal with it. So yeah, it's a really important point to be able to just get away from parts and just live.
I didn't know that you actually can't flush it out. I mean, that's quite concerning then.
There's two hormones that kind of counteract each other. I can't remember what the other one is. I actually had to do a dissertation on it. But the cortisol's very little when you're a baby, and that builds up. It's the long-term stress hormone, and it gradually builds up as you get older and older. It's just one of those things. You can do things to counteract it and to stay it off, and it'll go up and down. But on the whole, older people have more cortisol than they do the younger people. It has its own functions, do you know what I mean? But it's kind of it is the one that will shorten your life a little bit. Do you know what I mean? But
it's kind of interesting though. It kind of explains like the grumpy old person, right?
Yeah.
Especially if they've had a hard life. Do you know what I mean? It's kind of
right.
All sorts of things. It affects your skin. It affects just the way you move. It'll hunch you over. It's closely linked with your psychology and your general. To me, it's kind of closely linked with your whether you're an optimist or a pessimist, and that sort of level of it, that sort of thing. Do you know what I mean? Because I think optimism is something that I think is really important for traders, which is difficult for me because I'm not a lot of the time. I try to look that way philosophically, but actually living everyday life. If you're not looking at optimistically, you can't see opportunities, can you? If you're looking pessimistically, you're always looking for things to fail. And bingo, if you're in a pessimistic time, your trades will fail a lot of the time.
Yeah, I think that's also just a function of you being English, just generally pessimistic. I noticed that with a lot of English people.
I remember when I went to England, rain didn't even affect them, right? It'd be raining, going about the day like nothing's different.
Exactly.
Yeah, and I think I knew somebody who went to school in Edinburgh, which is like up in Scotland, and I guess there's so few days of sun there that they're like, one day of class, they're like, it's sunny out, class is dismissed.
Yeah.
But no, I think what you're saying kind of ties into what Krown was saying about, if you build that ritualistic, gym, sauna, that's going to have a undercurrent on your emotions, right? And it's going to steer it in a positive direction.
It gives you an outlet. And if you can actually have some mindfulness that actually this is purposely for releasing the stress that you're building up. Because a lot of people, when they're doing something that's stressful, most people deny it. I don't. I train as a therapist, and so I work very, very heavily on releasing the stress that happens to me during the day. I mean, you see it in the easiest way to see it is the example of prey being chased by lions. So we have the fight or flight. There's actually another one as well. There's a freeze. And so what often goats or deer or something will do, the lion will grab it, they'll freeze because they can't run away. They've been caught. They can't fight because they can't fight a lion, so they'll freeze. Lion drags them back. There might not be that damage. Lion goes and slips down. Goat gets up, shakes itself off and runs off. Do you know what I mean? But it has to shake out that system, shake out the system. And it's you can read about it in there's books on post-traumatic stress disorder. They often have. There's a book called Waking the Tiger, called somebody Levine. I can't remember his name, but that was his opening paragraph. His opening chapter was about that and how we can actually deal with stress and actually get it out of the system.
That's extremely interesting. I'm gonna actually write down that book right now.
I can send you the link.
Yeah, please do. Please do. That'd be amazing.
Waking the Tiger, it's called. I've mentioned it a few things. It's a book that therapists read when they're training. But it's really, really interesting. It's got a lot of interesting stuff in there.
Yeah. I see. Just to kind of pull back to that prior conversation, I see Mama's Boy actually left a comment that was an aha moment for him, talking about like the time that it takes for a trade to play out. There's also another thing that I haven't mentioned that I think might also be of interest to you, in the sense that you don't just want to know the average time for a trade to take out. You also want to divide that up by the average time of a winning trade versus the average time of a losing trade. And then also, I thought it was really helpful for myself to see the maximum drawdown that I saw on those winning trades as well, like the average drawdown, basically, because, then I could be like, oh, this trade's gone like X amount of percent against me, but that's actually quite normal for this strategy anyway. So why am I freaking out about something that, is quite normal? And kind of just thinking through those sort of processes really, really helped. Yeah. Doing that sort of stuff is just a massively helpful. Because once you have those statistics, like, you can do all sorts of crazy strategies with them too, which I don't know, probably don't need to get into here, but yeah.
Yeah.
No, that's
diving a little bit deeper in the strategy. Are you using a sort of equity building plan to slowly increase your risk and position size?
When I was first kind of evolving out of my major blowout, yeah, and when I was first kind of getting started as well. But nowadays, I'm pretty just flatline with it, because I don't want to trade any bigger sizes than what I already do. In fact, I've actually been decreasing them in the past couple of years here, just because I don't see. I'm not like, I just don't need like the money, and also I just see it as like an unnecessary risk. It's like I can trade bigger amounts, yes, but I don't need to do that. And also, it's easier for me to remain emotionally centered when the size of my trades is lower relative to my equity anyway. So to me, that's like a win-win, and kind of where I want to be.
Yeah, I think the inverse of that is that people who maybe don't have a lot of money, they feel the need to do the opposite of that, right? To build up,
yeah,
which is doesn't work, right?
Well, it puts you under unnecessary pressure. I mean, when you feel, or when you see a lot of other people getting rich at this casino, you're more inclined to bet more, but it doesn't mean that you're going to be successful as well. It could very well be that that's going to lead to your demise, and typically does.
Also, people brag about their wins, but they don't tell you about their losses. I mean, there's quite a lot of us on our Discord. We'll post our failed trades just to show that we're humans. Do you know what I mean? And it's kind of really useful, particularly with experienced guys, to see.
It is, man. Absolutely.
And it's nice to see that. Oh yeah, this one didn't work out, because they're very matter of fact about it. I mean, you've done that a couple of times yourself, I think, Falcon. And it's good to see for us guys that haven't quite got it yet, because that can be really difficult when you see people winning all the time. It pushes you in the wrong direction sometimes.
Right. Well, it's like looking at social media like Instagram, right? When you look at social media like Instagram, you compare yourself to the highlight reel of other people's lives, which is not real to begin with. There's also a bunch of Photoshop and everything going there as well. And hey, there's actually a lot of Photoshop that goes on in P&L posting on the fucking internet too. I'm sure of it. So, you're comparing yourself. First off, you're comparing yourself to something that probably isn't real, and second off, you're comparing yourself to something that is also not realistic. So, it's just kind of like a nasty thing. But the reason why people do that, and I've played around with this myself, I'm definitely guilty of it, is it gets a lot of engagement on social media. If you're trying to grow your social media, that's the way to do it. I mean, you want to be able to show
basically what social media is, right?
Right.
Creating some image and presenting that to the world.
Right. Exactly. And that's just it's not realistic.
It's a way a lot of people get their dopamine.
Yeah, exactly. Well, that's the thing, man. It's like, most people, and I include myself in this too, man. Like, it's it's almost like I want my YouTube analysis to be more right. I get more excited about that than me winning a trade, because
I've actually noticed the same thing. Yeah,
100%, man, 100%. You want to be right, and you want to be recognized as being right as well. But it's just, reality is always there to remind you that it's not possible and it's not real. And then logically, I have to remind myself, no, dude, I want the trading to be good. That's the more important thing.
I did an experiment where I did analysis, and then I would share my analysis publicly with people in the Discord. And then I would take a trade that was directionally opposite to my analysis. And that was a really interesting experiment because I found that I could be in a winning trade that I took contrary to my analysis and be making money and be upset that I was wrong.
Yes. Fucking yes. And this is like one of the beautiful things about doing a YouTube is I've definitely felt that because again, when I'm doing my YouTube analysis, it has very little to do with my actual trading. So I find myself in those sort of scenarios somewhat frequently, actually. And I've experienced the exact same thing that you said right there. It's actually really, really interesting too.
Do you feel like you touch into the sentiment of the market with like some of the YouTube analytics and that type of deal? Twitter analytics?
That's also a really big leg up for understanding sentiment is seeing the engagement on particular videos, particularly with different sort of titles and sort of the analysis that goes alongside them as well. That is actually really, really useful. I can always pinpoint when the market has made an extreme, like the high or the low, just by looking at my views, because it's always the highest view count on those, on those movements.
Yeah, that's really interesting. I mean, my channel is not really that big right now. I mean, it's very few views, but it does have some analytics, and I will be going through the analytics, and I'll notice like some of the videos where I thought they were too good to upload, were some of the worst on the analytics.
Right.
There were like a few videos where I'm like, this is too close to my, the secret sauce I use. I can't upload this. And then it'll be like first on the analytics.
Exactly, man. Exactly. I've learned that lesson as well. It's like you never know what's going to hit, but what is always consistent is when the market's moving, when the market's making, especially big dumps. Like those are big days for YouTube usually. So yeah, man, it's it's kind of
an unrelated thing.
Yeah.
So I got a random text from my mom the other day. She had $500 in Bitcoin, and she just texted me to tell me she capitulated. So,
God damn it, Mom! I thought you were diamond hands.
Yeah. Well, sometimes I don't know. It's things like that. Sometimes you notice them, and you're like, okay. My cousin texted me 2 days before the March 2020 event, asking me, "Hey man, I know you are into the markets. Can you help me? Give me some advice?" And then 2 days later, there was the black swan.
Yeah. Always happens, man. I'm sure we've all had experiences like that. Like I always get people hitting me up about XRP every fucking bull market. Every time the things are really moving, it's always XRP.
I'm one of those people.
I don't know why.
It's because I bought a shit ton back when it was cheap, and I'm just holding on.
Yeah, the old Bill Gates announcement from 2017, right?
Oh yeah.
I remember that. God damn, man. It really did pump pretty fucking hard that year too, but ever since then it's been a dead horse, man. It's been doing absolutely fucking
I wasn't around in the market during the BitConnect times, and I feel like I missed out on a legendary time in the market.
I mean, you're kind of getting that nowadays with Hex. I feel like we kind of saw that for a little bit, but BitConnect was just on a different. I think it was on a completely different scale. Actually, it's much bigger, and it was like a cultural movement almost with the music videos that people were making and all of that stuff. It was really something, honestly, to behold.
Yeah, I was watching one of your live streams, I think a few days ago, and you mentioned that you really didn't. You kind of fell off with your gaming channel, and if you were to create a new YouTube channel, you would create something with a philosophy bent to it.
Yeah.
I'm just kind of curious because I find myself, the YouTube channels I'm most interested in have that same philosophical bent. Yeah. What particularly are you interested in that realm, and are you going to start a YouTube channel about that?
I don't think I have the experience necessary to do it right now. I think I need like another 10 to 20 years to live. But the most interesting philosophical, there's two schools of philosophical thought that are the most interesting to me. One of them is Stoicism. I think that's just the most useful in today's world. Yeah. And I have like as an operating system, it's like I always run through things in the filter of that. And then the other one is actually like Jungian psychology, which is a lot more. It's a lot more like psychedelics,
kind of along the line of like Jordan Peterson. He's into a lot of
he definitely touches into it a lot. But that kind of stuff I feel like is not as immediately helpful, but it can really help tie in a lot of the references experiences that you'll naturally get in any endeavor, trading included, that can help you understand yourself, even better. So Stoicism is a lot more direct and a lot more just like plain, and I find it incredibly useful. But when I need something a little more deep, or if it's that time of the night and I want to go a little bit deeper as well, yeah, I'll tune into one of those videos. And
yeah, I think Stoicism is probably the most directly beneficial to like a trading regimen.
Yeah,
but
absolutely.
Jungian psychology is a deep rabbit hole as well. That's really interesting.
Yeah, it's pretty crazy, but I do find it very, very useful, and I definitely do watch a lot of those videos, like especially nowadays too.
I don't know anything about unions. I've not heard of that one before. I'll have to have a look at it.
Oh, you have, but you study psychology and you have it. Oh man. Man.
I know. It was you that put me onto the Stoicism. All my own philosophy come back. I don't really read or write very well, so all my philosophy just comes from my own musings, if you like, my own experimentations when I was younger. But
that's good enough as is, man. It's a really important thing that we don't really like focus on in our schooling, because I guess we just don't really value it that much. But it's basically your sort of lens of reality and how you sort of filter things through as you get those experiences, because obviously, like, we can all here experience the exact same event, right? But we'll all likely have different responses to it, and that comes down to our processing of it, which is basically a philosophical endeavor of how that happens.
And as we're learning, everybody learns in very, very different ways.
Oh yeah,
our brains are really different. I mean, I certainly don't learn the way I was taught to learn. I did terrible at school. I did absolutely atrocious at school. Like, it's because reading and writing is not that easy for me, but it doesn't mean I'm stupid because I went to university and got a degree because I was doing maths. It's like I can sit there and look at symbols. That's fine. But we just learn in different ways. Our brains work in different ways. Some people think outside the box. Some people prefer that sort of conventional way of learning. But I think in this day and age, especially with the internet and this kind of weird connectedness and disconnectedness that we have, that the internet brings us, we can start learning in our own ways. And it's time we started letting kids learn the way they want to learn, not pushing away onto them. You know what I mean? Because I think it sets a lot of people up for the fall.
Yeah, our school systems, they're like an antiquated system, right? They're really designed to generate more factory workers. I mean, that's kind of who designed the school system, to basically raise people up so that they could be good workers. And hey, that was appropriate for society, like before the information or digital age, especially. It's fine.
Yeah.
But we're not in that anymore. And if you're training to do that as a kid, you're going to be lost in the next in the next 30, 50 years, because we're evolving very rapidly now into the digital age, and that's just not useful anymore. A computer's going to be able to regurgitate facts back at you better than some kid learning it in the classroom. It's just, you can't compete with that. So don't compete with that.
That's going to be a weird time for sure, because
a
lot of people, derive their sense of identity, their sense of purpose from their job and what they do for a living. And then if you move into a time where that's not really as common as it is now, and not everybody has that, what do they use to form their sense of identity, and how do they, compare themselves to others? It's, I don't know how far off that is, but I think technology is moving pretty rapidly, so it might be here a little bit quicker than we think.
Yeah,
I think we're going through that phase now. I think the world changed around 2012. The world changed. That's when the internet really took off. That's when the question, oh, how do I do that, became completely irrelevant. It's like, go and Google it, man. Do you know what I mean? It's like you can get the information has just exploded everywhere. That's been solved. Do you know what I mean? And finance is trying to be solved now with Bitcoin and all these sort of things. Do you know what I mean? It's like, and a lot of people don't like it.
This kind of ties into something I think a lot of people think about, and Krown, I'm curious on your opinion of this. For a lot of time, people talk about, the rise of algos and different quantitative-based algorithms, and they think a common concern is that it will, take discretionary individual traders out of the market. Of course, we haven't seen that yet. I'm just curious what your opinion is on that as the technology advances and gets better.
That's a really, really good question, because I think this is something that that gets brought up by people who I think they're kind of conflating ideas here, or they don't fully understand it, because they are right in a sense that, yeah, algorithmic trading is, is a big part of trading and does run things. But you as an individualistic trader, as a retail trader, you're not competing with these people. These people are mostly employing high frequency trading strategies, and they're trading against each other is what they're doing. And they're front running each other by like a fourth or like a hundredth or a thousandth of a cent. And they're trying to do it like, 6 decimal places in terms of seconds to the right, faster than the next guy. And they can, if they do that like a million times a day, they'll make a good amount of cash, right? So that doesn't really matter, I think, to us right now. At some point, algo trading, like the problem is that algo trading, who are they programmed by? They're programmed by us, man. They're never gonna be able to do anything that you're not able to do yourself anyways. They can just do it faster is what they can do. So when you have an algo on your side, and yeah, they will get more sophisticated over time. It's basically like having like 1,000 hands to do other things, but they're dumb. You can't really program them to do like super complex things. I mean, you can, but it doesn't really matter. Like in the context of that conversation, if you're a retail trader, you can still have your edge. You can't trade against those guys. Obviously, that is gone. Like that's very true. That is gone. You can't compete with them. You won't compete with them. No way. But you can have your edge, doing other things. So yeah, I'm not worried about that really, or at least probably not in our lifetime.
Yeah, I've heard a lot of other experienced traders kind of mention the same thing. They think they said that fear was existing in 2000 when computers were in their infancy, and we just haven't seen that. Ultimately, markets are still governed by human psychology and will probably be governed by human psychology for the foreseeable future.
Yeah. That's. Say that again.
Computers are governed by human psychology. A computer can't seed of thought for itself. That's the thing that we can't crack. It doesn't matter how far you go down to AI. Neural networks are incredible. You go and look at Google's TensorFlow. You can feed it all the YouTube videos and all the Wikipedia things, and they set it a task. They said, go and win chess. It said, what is chess? Go and find it out. 18 hours later, it beat Grandmaster. It's like, if you had a kid that do that, you'd probably want to get it away from you. It can't initiate it for itself. It just cannot do that. That's what we have. That's what makes us human and not a machine. But it is worrying what computers can do at this level, I suppose.
Yeah. I mean, but to go back to your point, like I do want to be very clear that if you're trying to play a game of arbitrage, if you're trying to play a game of doing things fast and high frequency trading, yeah, you're fucked. You can't compete with the machines or the people basically owning those machines. But you can still have your edge elsewhere. I don't really know if I see that going away. Maybe. I mean, obviously there's things that we don't know, but I don't think it's a concern for us, at least for a while, if it is going to be.
When it just smooth out the swings more, if anything, just smooth the curves out.
Probably. I mean, theoretically, yeah, I would think so. It's hard to know.
Yeah, I've heard some people, make the argument that the introduction of algo traders actually makes the charts trade more technically, because it shorts up.
Well, that's how they're programming those things. I mean, it's not that they're programming them out of magic. Like, it's based off of something. Could be like quantitative analysis, could be technical analysis, could be a combination of the two, which it usually is. Could be fundamental analysis. Not sure how the fuck you're doing that, but I know people set up like bots to scrape the internet for Elon Musk tweets, for example, so they can respond as soon as possible. It's like, you can play that game, but people think of like these algorithms as smarter than us when, I mean, they're not. I don't think, at least. I mean, they can just do things faster.
I think ultimately they're just trying to make money, though. They're not trying to screw other people out, are they?
Yeah.
It's not like they're not trying to take your money off you. They're just making the money that's there.
Of course. Yeah. Think about it for yourself. When you make a trade, you're not like, I'm making this trade because fuck that other guy. It's like, no, dude, you're just trying to do your own thing. Like, you don't even know the other guy in the trade.
The market's out to get me.
Yeah, exactly. I always love it when people say that, like the evil market makers are trying to get them. It's like the market makers don't even know who the fuck you are.
Yeah, they knew where my stop was. They came after me.
Yeah, it's like they can figure that. Yeah, yeah. Quant firms can maybe figure out your stop losses, but you can also figure out other people's stop losses too. Where does everyone put their fucking stops? Under the last wick low or the last wick high? You know, it's always there. Like that's where the liquidity is, and that's, you know, especially as price action traders, I'm guessing that's exactly what you guys are focusing on.
Exactly.
You know, you're looking at where the liquidity is. Yeah, exactly, man. Exactly.
That's pretty interesting. Because Krown, you worked, I believe, in a market making firm for a while.
Mm-hmm. Yeah.
How's the mindset of a market maker different than, you know, somebody else, a retail trader operating in the market?
That's a really good question. So it's completely different because market makers are playing a delta neutral game, or in a game of arbitrage, basically, meaning that we don't care about direction. What we care about is trades being done. And to juxtapose that against like the average trader or the average retail trader, especially, they're trading direction, right? Like you want things to go up, you want things to go down. Blah, 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 blah. Doesn't matter for a market maker. A market maker in the way that I did it. So I was a market maker. I was an equity options market maker. So this might be different if you're like, if you're just like a regular spot market maker or something. That's a different game, I guess, but probably same idea anyways. As an options market maker, what we were doing is we were looking for forms of arbitrage that we could have typically via the reversal conversion markets, which sounds like a really crazy technical term, but basically it comes down to this. There is a three-way sort of like triangle to combine puts, calls, and futures or spot, whichever one you want to use, basically, to pull in, a theoretical value immediately, basically, especially in today's world when things are, extremely liquid and penny wide. So, for example, I as a market maker, what I'd actually do on a day-to-day basis is I'd have a model of what I believe the theoretical, or not what I believe, but what my model basically is telling me the theoretical value of an option is worth. So let's just say it's a 100 strike call. My model says it's really worth $1. And then as a market maker, I'll say, hey, I'll put up a bid on this call for 90 cents because I know if I buy it for 90 cents, it's worth $1. I can just sell it. It's good. It's fine. I'm cool with that. And then also, I'll make an offer on it as well for $1.10. So I'll sell it to you for $1.10. I know it's worth $1. Yeah, fuck you. It's not worth that. But I know that if I at least sell one of those sides, if someone comes in and does business with me, and my model is telling me that it's only worth $1, then I can go and sell the other side or buy the other side if it's relevant, and then pull in the spot side as well. And I'm essentially delta neutral, meaning that I have no directional risk. And I've just locked in like the 10 cents that I made on that contract. And then I just do that over and over again, basically. So it's a completely different game. And that's why I always laugh when people are like, the evil market makers are out to get me. It's like, they don't even know you exist. They're trading against themselves for the most part, actually. Like a lot of that's just picking each other off.
So for me, somebody who, doesn't have that experience, what you just said kind of reminds me of a little bit of the cash and carry trade that was in place during the bull market.
It's exactly that. Yes. It's similar, but different sort of ways of getting around that. Yeah, it's exactly that.
Where's the risk held with that then? What's a bad day for a market maker then, just out of curiosity?
So your risk comes from you get hit on one of those sides of the trade and you're not able to pull in the other sides. So if I sell a call to someone, meaning that now I'm short a call, and then stock starts to go up and I'm not able to pull in the put side or the stock side, then now I have upside risk. But because today's equity options are so fucking liquid, it's usually not an issue. Can happen, obviously, but that is your risk.
Right. Okay.
I think when a lot of people talk about market makers, they talk about market makers driving the market to an area of liquidity. Is that a fair way to characterize it, or and do market makers think about liquidity, and if they do, like, what are their thoughts about that?
So What people have conflated here is the term market maker with like a quant firm, like an Alameda, for example, or like a Three Arrows Capital. These guys are quant firms. They're not market making firms. They're not liquidity providers from the way that I understand it. They're not looking at delta neutral. They are looking to trade direction in a lot of cases. And they can do that, and they will do that. And they can actually map out your stops. It is possible for them to do. Whether they're, literally in cahoots with the exchange, which is highly fucking illegal in real markets, but, in cryptocurrency land, I guess you could do it. Or they can, if they're actually very sophisticated themselves, they can figure that sort of thing out. So yeah, they can and will do that. And that is essentially what you saw back in like, especially 2018, 2019, those BART patterns, right? Where, you know what I'm talking about, right?
Yep.
That's what was happening there. Market makers, they theoretically should not care about direction at all. Just by definition, they're looking to be delta neutral, which means you literally do not care about direction.
Yeah, it sounds like Alameda Research really kind of took the throne. In crypto.
They're top guys.
Yeah,
they're the top.
So maybe they made a painting BART patterns in the price chart.
Yeah. I mean, that sort of stuff really did work for whoever was doing it, because what they would do a lot of the time is they would paint these technical patterns, which is one of the reasons why I'm just not a fan of pattern trading to begin with. And then because they know, like, hey, everyone's looking at this like inverted head and shoulders fuckface pattern that we're gonna go up, and we'll just slam it down on the other side against them. We can paint that for them because the markets are like they're pretty thin at that time, especially like. It wasn't super high market cap. If you had a few $100 million, you could probably run things, especially $1 billion, you could definitely run things. And those guys did have it at that time too.
So this kind of ties into a question as well that, involves back testing. If you have these different market players, as time goes on, different quants and different people moving the market will step in, step out, and that can influence kind of the behavior of the market. And so maybe when you're doing back testing, maybe you notice what you're saying back if you go to 2018, a certain system that was profitable in 2018 no longer works. And I guess, if you have a system like that, maybe you have a profitable system, what's the best way to identify that if it's happening in real time and like your edge is kind of diminishing?
Right. This is a really good question. So this goes back onto the whole discipline thread of conversation, in the sense that, you have to keep on tracking your results so that you can consistently confirm that the results that you already have, those are still relevant. If you don't do that, then yeah, over time, things can and will change. There were strategies back in 2008. There was just like a fucking random thing in 2018, for example, with like the 3-hour stochastic. And it got every fucking move right. It was so weird. It was the weirdest thing I've seen in trading, honestly, maybe ever. And, a year later, it didn't work anymore. So, yeah, go ahead.
No, I remember that. I remember back testing that. And that was kind of the foundation for one of the initial trading systems
Oh, right on.
Yeah.
Yeah, that's funny, man. So you'll find stuff naturally that works like that. For some strategies, they do seem to be a little bit more on the timeless side. If you're kind of working off of like a principles-based template like myself, like a trend, volatility, momentum, those, you're going to see slight variations here and there. But at least from what I've noticed thus far, there hasn't been anything like super statistically significant that's like made me completely go the other way.
Yeah, another question that comes up commonly is if you're trading Bitcoin, it's like, do you use the spot Bitcoin chart or do you use the CME Bitcoin chart? Because, they have different daily closures, different weekly closures. I know you've probably mentioned this a few times, but, most people don't have access to CME if they're a retail trader. So should they be looking at the CME chart or in that scenario, or just focusing on the chart they're trading?
If you're a YouTuber looking to get your analysis right, then CME charts usually going to have higher hit rate of just general indicators and strategies and whatnot. If you're trading and you're not a YouTuber, just trade the chart that you're trading, the exchange that you're trading on. You don't want to conflate things too much. So yeah, you want to be as specific as possible. I like to look at CME charts simply because I find that its signals typically play out better, but that means that's just for YouTube analysis, because I'm talking usually about direction of the general asset is what people gravitate towards.
Gotcha. Yeah,
Do you tend to just
could you say that one more time?
More of the spot?
Do I trade more of the spot?
Yeah.
Man, you keep on
trade the spot.
Oh, do I trade this? No, I don't trade spot at all. I trade mostly on Bybit right now, actually. So I guess technically all futures.
Oh, okay.
Yeah.
Right.
Yeah. So when I'm trading there, I just look at that chart. I'm not interested in the CME chart. Anyways, it doesn't really matter to me.
I see. Yeah.
Right. Yeah. And then it's also like if I'm for my particular strategies, I need to I have very specific entries and whatnot. So that needs to be on the exchange itself. Like there's no, it wouldn't make sense to look at CME for that, for example.
How does it compare to when you were actually a market maker? Do you trade in a similar sort of way, or do you have to do it in a kind of opposite way?
No, it's not similar at all, actually. We lost Mama's boy.
Yeah, he had to take off. It's midnight where he's at.
Oh, right on. Oh, okay. All right, fair enough. Man, I like that guy. It's finally got to talk to him.
Yeah, he's great.
Yeah, as far as trading as a market maker versus trading as I do now as just regular retail, it's completely different because again, I was doing those delta neutral strategies. Nowadays, I don't even really have access to options on Bitcoin, for example. I do have like DeFi options, but it's actually kind of cool. You can basically just like do some far out the money strangles every week, and you got to cover against those when they go against you. But for the most part, nowadays my trading is directionally based, and that's just kind of what it resolved to because I don't really have access to like more tangible options, which I suspect is not that far away, but at the same time, I'm actually quite happy doing with what I'm doing right now.
Yeah.
So I'm curious, you probably have a pretty large trading account. I'm assuming your trading account isn't, a significant portion of your net worth. How do you think about your net worth as like, do you think about that as like a portfolio? Do you have a strategy for that? Something that's separate from your trading account?
Yeah, man, no one's ever asked me that. That's a really good question. So ever since like, I think about 2019, I kind of set aside enough money for myself where it's like, hey, if everything else went wrong, I could go to like a Thailand, for example, with my girlfriend, and we could just live out our life there, and it wouldn't be anything glamorous, but it'd be okay. And that was actually a really sort of good thing for me to do because it takes the pressure off. And so nowadays, what I do is I do trade less size compared to my equity than I did it before. But at the same time, I look at my total portfolio, my total equity as just, it's like, it's there basically. This is a terrible way of explaining it. So let me give an example. What I do is ever since about 2019 is that all of the revenue that I make from trading is I put that in basically a wallet, a cold storage wallet, and I keep it in Bitcoin, some of it in Ethereum as well. And I just build it up there, and I treat it as like a little game, because that's kind of what it is. I treat it as if it's there. I've also kind of told myself I'm not gonna touch it, at least for at least another 5 years, probably more like 10 years. And at that point, if Bitcoin becomes what I think some of us might think it might become, then that'll be great. If it doesn't, then I'm still fine anyways. And I also have YouTube on the side that also like it's actually started to print money as well, which is cool. So I have my program. So I try to take as much pressure off myself as possible, but at the same time, I do want to continue to build that up. And so I don't take any of that money out. I leave it in there, and it's just a part of my general financial strategy, where I want to be about, or I guess what I'm about right now is about 50-50 in cash and crypto, especially after Bitcoin coming down quite a fair bit there.
When you say crypto, is that Bitcoin, or are there any shitcoins in there?
Ethereum. Yeah, a little bit of Ethereum, but I just started to accept Ethereum as like a non-shitcoin maybe. And I do hold a few other ones as well, but small amounts relatively speaking.
Yeah, so it might not be fair to call Ethereum a shitcoin. Because personally, one of the, if you have like a certain metric to tell, because there's so many altcoins, right? You need to have a certain metric to filter out the thousands that exist. Mm-hmm. And for me, the number one thing I look at is, which one performs the best during a bear market, right? And which one thrives after a bear market. And really, if you look at it through that perspective, Ethereum is the undisputed king, because it survived through the bear market and is still thriving. And so maybe it doesn't deserve to be called a shitcoin.
Yeah, well, I agree with you, man. I do that as like a term of endearment. The fact that it survived now to, I think, hey, great to meet you. Great to meet you, Function, as well, man. Hey, you take care. You take care, brother.
Thank you.
It survived, I think, a couple market cycles now, so it's probably okay, right? Most of the ones that were going to fail, they fail after their first bear market. And the fact is, Ethereum has put in macro higher lows. That's respectable, and also rallied against the Bitcoin parent as well, which is also something that most things do not do.
Yeah, it's interesting to hear you talk about your cold storage, because I would assume, when you first approach the crypto market, you didn't have cold storage, right? Or you didn't have that spot position. So I'm curious, at what point did you decide that you needed to do that? And, what?
I remember exactly, actually. So that was in 2018. Bitcoin had just put in its first major high at $20,000. It slammed down to $10,000. At that point, I actually was still bullish on the market for the long term. But after that point, like in the next couple of weeks, Bitcoin popped back up and it put in a lower high on a weekly, which I considered a high time frame at that point, at 16,000. And that's when I started to like hoard things, because I still kind of believed in it long term, I guess. But I took out the money that I wanted to back to my bank account, and then I left the rest in Bitcoin, which was actually quite a small amount at that point. And then ever since then, I've kind of been building up, and I think I took a little bit more out later in 2018, maybe once again small in 2019, and ever since then just been kind of adding to it as like just like I guess like an extra wallet, like an extra bank account kind of.
That's interesting, because I think a lot of people might not necessarily pick that up from some of your YouTube videos. Because you sort of temper it with the cold hard rationality of a trader.
I guess it does kind of get lost in translation, because I don't really have a chance to, or I don't really even think to kind of explain that. I just don't think I don't know if it's like super relevant to get in with like a general audience of like my personal finances. If people ask about it, if they actually care, I'm happy to go over it. But at the same time, it's like, my situation might be a little bit more unique, because I kind of built up that sort of my actual fiat bank account, or my US dollar bank account first. And then, and then also YouTube now helps out. I mean, for the first like 2-3 years of YouTube, it wasn't really much money, but nowadays, getting, with the channel the size that it actually is very livable and quite nice. And so that's been really an added pleasure with it. And just, just a quick reminder for anyone out there who is, looking to be a trader, who might be one, search out extra sources of income, man. There's nothing wrong with it. Only good things will come from it. It really takes the pressure off as well. And, it's only made my trading better.
Yeah, I'm sure if if you're in a situation where you just started full-time trading and you need to make profits to make rent for the month, that's probably not going to be a great
good luck. Yeah, exactly, man. Good luck. That's no way to learn, obviously. But even if you're first starting, having a job on the side is completely fine, and you should do that. I mean, until you can support yourself and you actually like have full experience with trading, at least for like a year or two. But yeah, there's absolutely nothing wrong with that, and it can only really help. It's a weird thing in like our society where it's almost like we've become like averse to having money almost, or it's like a bad thing. It's like you're a bad person for making more money. It's like, no, there's nothing wrong with that. I mean, it doesn't make you a bad person. It doesn't make you a good person. It just is, and whatever you do with it, that that can be good or bad, obviously. But once I started to think about it, in the terms of like like a Joe Rogan, for example. He gets a Spotify deal for $100 million or maybe even more, we don't know, and he takes it. It's like, did he do something bad there? I mean, he's already rich as fuck. It's like, no, he's just making more money. Like, that's fine. There's nothing wrong with that.
Yeah, no, and another cool thing about him is that, he achieved this like massive level of success, and then, he has all his friends and he puts all his friends on.
Yeah. And that's amazing, man. Dude, and that's honestly what I try to do with some of these as well. It's like people from the community who wanna try something like this, like you. I'm so much fucking in support of that. Like, that's amazing. It's going to benefit yourself as well. You can pass it on to other people. Who knows where the fuck that ripples to, but better than not doing that, right? So yeah, man, I'm all for that.
Yeah, definitely. We definitely appreciate that. And, your appearance is definitely big for the channel, but it's also important for me personally, a lot of these other guys, because of course, we were in your program and you taught us a lot, and it's sort of you represent our origin story.
Wow.
Yeah, I mean, I watched you every day for at least 18 months straight. Like, I mean, because I was learning from you in your program, I wanted to see, I'd watch your morning live streams, your gaming, I couldn't get enough Krown. So it is really cool that we are doing this. So,
dude, absolutely, man. And we should honestly do it again in the future if you guys want to do it. Like, I'd be more than happy to do it. I think it's good. I think it'd be interesting for other people to listen in, and it's only been a pleasure, man. And
yeah, definitely, we should do a round two. I know there's another guy in our Discord, Roman. Shout out to Roman. He really wanted to be here, but he had an executive meeting, I believe.
Okay.
So he just couldn't make it. So yeah,
we can definitely do that, man. Absolutely.
Yeah, we can do a check-in in like 6 months or 3 months, whatever it may be. So that'd be great.
Absolutely, man. Absolutely, that'd be an absolute pleasure, man. You guys want to wrap it up there? Or?
Yeah, sounds good.
We got to leave enough for part 2, so.
Yeah.
Yeah, I did want to ask real quick. You're always talking about developing new strategies. I mean, obviously you're a successful trader. Is that because you just like developing strategies? You're trying to stay ahead of the market? You're always looking for, maybe there's something a little bit better than what you have? Or, what goes in your mind when you're doing that?
So there is an element of it where it's just like, it's quite fulfilling to do, honestly, because if there's something that I'm going to be motivated by, it's like I can motivate myself by, I can make something better. I can make something better for myself. So definitely that would be the reason. Also, it's just, it gives me something to do, man. Like
that's kind of what I figured you'd say. Yeah.
Right. Where else are you going to spend your energies at? Right. For me, I'd probably start gaming or something. It's like, that's cool. But when I really think about it, it's like, okay, I can spend this time gaming in like Bannerlord and create a really cool army. And that's honestly, it's pretty fucking fun. But at the same time, I could use that time. And I think about it in the sense that like, shit, if I do that, then I'm giving up this. And it's like, that's just more fulfilling a lot of the time. So I do try to balance it out a little bit more nowadays. Absolutely. But, there's just kind of a joy in actually doing that. Like, you're going to be naturally motivated by, oh shit, if I work on this a little bit more, I could make more money. Like, I could be more successful. That's amazing.
Yeah, that kind of brings up two things. Do what you love, you'll never work. And then also the determination and dedication you do. It just proves if you keep working at it, you're going to, what doesn't prove it, but it sure gives a good example of it. You're going to get where you want to be.
Absolutely, man. I mean, you want to be involved in something where it's like, you're going to work hard because you want to work hard, and you don't need to be like, no one needs to be like cracking a whip behind you. Like, obviously, that can also work as well, but it's going to be a lot more maintainable and sustainable for your own self if you can be that driving force. Because, I mean, we should all kind of be motivated by our own potential success. I would think. I mean, that is something that anyone can really do. I
agree. Yeah, you're definitely a good example for the crypto community instead of all the people yelling and screaming into So I don't know. It's
I do a little bit of that as well.
When some of these, well, yeah, but it's just some of these people have millions and millions of subscribers, and they don't talk about anything. They just tell people what they want to hear, and kind of like what Falcon said earlier about the good stuff, nobody watches because it's too boring or whatever. So it's just crazy to think about. So
yeah, I mean, anyone can do this if they just literally follow those like really simple principles, which comes down to, find some sort of a template. You can use indicators, you don't have to use indicators, whatever the fuck, doesn't matter. But if you just back test something and you can actually generate a strategy around it, you can do that. It's fucking dry, you know, that's not really going to sell many, like, you know, engagement on YouTube, but that actually would be the crux of any sort of strategy. But man, you know, I've actually spent some time around some of these like bigger YouTubers, and I really, you know, they aren't trying to pretend that they're traders. They're not trying to pretend that they're like super successful traders. They know exactly what they're doing, and that's just their game, man. And the way that they look at it is like, they're like, hey, I'm providing an entertainment service to people who want to be, you know, immersed in this sort of a thing. And that's kind of how they look at it. So, you know, I've kind of learned to almost, I wouldn't maybe use the word respect, but like, you know, I understand what they're doing. They're very good at what they do. And, you know, everything that they do is dialed down to a science as to like, hey, this sort of a thumbnail is perfect for this sort of a day on this sort of a move because it gets this amount of engagement. And then if I start off my video with this and then I end it with this, that seems to do really, really well as well. I mean, they're just in a business. They're just in a different business. So can't really compare, man. But I try to kind of travel through both of them. And because, you know, if I go full on trader, no one's gonna give a fuck. If I go full on marketing, then it's kind of like I am fucked. But yeah, man.
I get it. No, it's a good mix. You do it very well, in my opinion. So that's why I
appreciate
kind
that,
of been,
man.
you know, gravitate towards you over the last couple of years. So,
well, shit, man. I mean, this has really been a pleasure, and honestly, I really do mean that. We should do this again, and quite humbling as well that that people are even interested in this. But man, I'm glad that you guys hit me up with this, and you know, let's keep in touch, and we'll run it through again. And again, I want to let everyone know who's listening to this to check out the links in the description below. Check out Mr. Falcone's YouTube channel it's called Edge, I believe. Edge, right? Just Edge.
Edge.
Yep, we'll have a link directly there. And I think that's a good place to wrap it up. So thanks again, fellas, and until next time.
Eric, thank you so much. Have a great rest of the day.
Take care.